Hey, welcome back to the channel. Today we're going to look at the latest home sales activity for the Eastbay. Here's the short version. The good news, lots more inventory for buyers. The bad news, not so much buyers out there. Hello guys, my name is Mac Rogers. I'm a real estate broker here in the San Francisco Bay Area. Welcome to the channel. If you're thinking of buying or selling, give us a call, a text, or an email. We absolutely love helping people move on to their next chapter. Let's start with the 880 corridor and look at inventory. There were several places that the number of homes for sale actually went down, namely Alameda, Albany, Berkeley, and San Lorenzo. The rest of the cities all up significantly in the number of homes for sale, with Newark up the biggest, up 118%. More than doubled in the same time period last year. The number of homes sold, as I have mentioned at the beginning of the video, more inventory but less buyers. Take a look at these numbers. All down with the exception of Union City, which was unchanged. Everywhere else down at least 11% and as high as 38% in Berkeley. Finally, the most important thing that most people want to know, what's happening with home prices? It's mixed. Places like Alameda, Fremont, and Newark were up while the rest of the cities were down. Castro Valley and San Lorenzo down the biggest, down 11%. On the 80 side of the Eastbay in West Contra Costa County, inventory are up all across the board and fairly significant in a number of locations like El Sobrante up 90%, Pinole up 69%, and San Pablo up 60%. El Cerrito up 10%, which translated to 2 more properties for sale. The number of sold properties, only El Cerrito was up. The rest of the cities all experienced declines, which is the same as last reporting period when all the cities showed sales decline. Sales prices, El Cerrito again the only one different. Price in El Cerrito is down 6%, which is a change from last reporting period when El Cerrito and Hercules were still up in price. Take a look at Pinole, up a big 15%. Let's move on to Central Contra Costa County. It was just like last reporting period. Inventory for all cities increased. I believe this is the 3rd month in a row that cities in Central Contra Costa increased in number of inventory. Clayton up a big 138%, followed by Walnut Creek 79%, Pleasant Hill up 76%. Just like in August, the number of homes sold is down across the board, at least 18% and as high as 39% for Concord. Home prices are pretty mixed, just like last August in Central Contra Costa County. Clayton down 10%, Concord up slightly at 1%, Martinez is down 6%. That's 2 months in a row that Martinez is down 6%. Pleasant Hill continues to go higher. It's up another 4%. Last month it was up 10%, and the prior month it was also up 12.72%. That's 3 months in a row that Pleasanton continues to go up. And finally, Walnut Creek also up 4%. Moving on to La Miranda, just like last reporting period, inventory are all up again in La Miranda. Orinda up 117%. The number of sold properties all down in La Miranda. That's 2 months in a row. Finally, the median sales price. Moraga is the only city down in price, down 11%. Let's head over to the Tri-Valley. Back in August, inventory was up across the board with Dublin, Pleasanton, and San Ramon all up over 100%. It's the same story this past month. Inventory up big all over the Tri-Valley. Dublin up 208%, Livermore up 100%, Pleasanton 208%, San Ramon 111%. Where are the home buyers? Homes can be had in the Tri-Valley. Go out there. The number of homes sold, just like what I just asked, where are the buyers? This is the 3rd month in a row that sales are down. Alamo down 54%, Danville down 47%, Dublin down 35%, Livermore down 31%, Pleasanton down 46%, and San Ramon down 7%. Finally, the median sales price. A little bit of a different story here. In August, Danville, the only city that was up by 7%. This past month, Danville along with Dublin are the only cities that are down 3% and 6% respectively. The rest of the cities are up in prices. Alamo up 6%, 2.6 million. Livermore up 7%, Pleasanton up a healthy 3%, and San Ramon up a good 5%. And finally, the Delta. Back in August, inventory was up everywhere. Last month, Pittsburgh was the only city that didn't go up in inventory. In fact, it went down by 1% or by 1 property. Antioch up 61%, Brentwood more than double, up 119%, Discovery Bay 38%, Oakley up 23%. The number of homes sold for the 2nd month in a row is all down. Antioch down 31%, Brentwood down 43%, Discovery Bay down 46%, Oakley down 33%, and Pittsburgh down 27%. Finally, the median sales price, Antioch up 5%, Brentwood down 3%, Discovery Bay up a big 30%, Oakley down 6%, and Pittsburgh down 2%. Looking at the big picture, inventory is up for the second month in a row, but down when we compare it to the high back in July. As we head into the fall, where real estate normally slows down, will we see a normal slowdown or a full-on hitting of the brakes? The number of sales is hovering around 1,500 to 1,600 mark. We probably continue to see that moving forward. And with more inventory and less buyers, we are starting to see weakness in prices. We continue to go down month to month. While we might not see a big crash, these small increments eventually will add up. The only thing that surprised me this reporting period is still how resilient home prices have been. I actually expected a lot more decline. But like I said, these micro declines eventually will lead to a bigger number on a cumulative basis. Marketing times continue to climb everywhere. We are now close to a month as opposed to 17 days in September of 2021. I asked this question earlier, where are the buyers? I always hear the following: I'm going to wait for prices to go down. Well, prices are going down. I'm going to wait for more inventory. Well, inventory is up. So, if you are a buyer or thinking of buying a home, here are two questions you should be asking right now. The first one, where do you think home prices are heading? Short term and long term. I've just shown you how prices are softening, but it's not across the board, nor are they happening month to month. It's actually fluctuating up and down. Now, for long term, which should be everyone's time horizon here, there are two places to turn to answer this question. First is the consensus of what experts are saying. If you look at what experts are projecting for home prices in 2023, they're forecasting home price appreciation around 2%. While it's true, some are calling for depreciation, most are calling for appreciation in home values over the next year. The second spot to turn to for information is the Home Price Expectation Survey from Pulsenomics. This is a survey of a national panel of over 100 economists, real estate experts, and investment and market strategists. According to the latest release, the experts surveyed are also calling for home price appreciation for the next several years. The second thing you should be asking, where do you think interest rates are heading? We all know that rising interest rates have begun to slow an overheated housing market as monthly mortgage payments have risen dramatically since the beginning of the year. This is leaving some people who want to purchase a home priced out of the market and others wondering if now is the right time to buy one. But this rise in borrowing costs shows no sign of letting up soon. Economic uncertainty and the volatility of the financial markets are causing mortgage rates to rise. George Ratui, senior economist for Realtor.com, says this: while even 2 months ago, rates above 7% may have seemed unthinkable, at the current pace, we can expect rates to surpass that level in the next 3 months. So he sees mortgage rates rising over the next several months. Another expert agrees. Mark Fleming, chief economist at First American, says, while mortgage rates are expected to continue to drift higher over the coming months, much of the rapid increase in rates is likely behind us. Translation, we are most likely going to be in this 6 to 7% interest rate environment. This is the new normal for the time being. As we head into 2023, the expectation is for the Feds to slow down their rate increases, thereby also pushing mortgage rates down again. And also the expectation of buyers coming back on the market, which is why home prices are believed to be still resilient. The bottom line, if you're thinking of buying a home, asking yourself about home prices and mortgage rates will help you make a powerful and confident decision. Experts see both prices and rates rising in the future. The alternative is to rent, but rents are also increasing. That may mean buying a home makes more sense than renting. Hey, thanks for watching. I hope you enjoyed the video. Please don't forget to hit the like button and subscribe if you want to get updated on what's going on in the real estate market, especially here in the Bay Area and in the Eastbay. Thanks and have a great day.